Thank you, Siddharth. Kind words. Uh, what we will do as part of the allocated time is we'll go through some of the proposals. Now, as I go through this slide, let me acknowledge and thanks Chambers for giving me this opportunity. It was a wonderful journey to test some of the propositions. As we move along, it is equally possible. And the purpose of studies, it's a study circle. The purpose of the study circle, therefore, is to come out with some new thoughts, to discuss those thoughts, to explore those thoughts, and then see how the law moves. Therefore, if I move further, equalization levy, that's in few minutes from now, we will immediately start with it. Provisions are written, provisions are known, therefore everything is now taxable. But is there something more in the game? And that is what we will try to move. The only caveat here is that at this moment, the propositions which I am going to speak are untested. Not that even I had an occasion to have a very great in-depth discussion and debate with some good friends of mine. But I do believe there is a lot of teeth in those propositions as we move further. Friends, I just start 5 to 10 minutes on one amendment. We go to equalization levy maybe for R and R 15 minutes and then end with liable to tax. That's all what I have, and I believe those are the provisions which requires focus when we look at the span of the amendments which have been made. Dividend taxation. 1st April 2020, there is a change in tax regime. The change in tax regime now tells us that when it comes to dividend income, it would now be taxable in the hands of recipient. Now, once dividend income, that is the onus or the base liability of taxation, changes from payer to recipient, whole host of provisions comes into motion. These provisions have always been known because there are payments of FTS, royalty, etc., which businesses have been making. But what new animal which we see is a case where dividend payments are made to shareholders. By nature, these shareholders are very tricky. They are not your vendors. It's not as if you can say, these are my standard policies of our organization. Here is a case where this shareholder as a group represents what you are as organization. A practice which was followed starting 2020-2021, numerous listed companies was, and this amendment largely impacts listed company rather than unlisted company, was that when it comes to payment of dividend, the way in which the act is worded, the way in which there are different rates applicable, there are 12 to 14 tax rates which will have some kind of role to play. Now, one of the category of the shareholders were FIIs. Now, section 196D did not make any reference to rates in force, unlike what was made by section 195, plus read with a decision of PILCOM, and PILCOM decision came at a very interesting time. PILCOM decision came at a time where country was about to go in lockdowns, and the discussion on this decision largely happened at lockdowns. We did not have any benefit of any tribunal decision which would reconcile the provisions which were contained in PILCOM decision. What PILCOM said is, in context of 194, provisions which are largely identical to 196D, was that when it comes to payer, for him there is no recourse to treaty benefit. In 194, as equal to 196D, reference to rates in force was missing. Therefore, he says that when it comes to payer, there was no benefit which is available. You cannot consider treaty rate. But when it comes to recipient, he can very well consider treaty rate. To many, this did not reconcile with the Supreme Court decision case of G, but that was what the law was. Now, when it came to deductor in FY 2021, almost all the listed companies, they all did withheld tax at a very peak rate. Now, base rate was 20%. When you top it up with cess, surcharge, etc., the rate can go as high to 23.92%. Now, this was the deductor's rate. When it comes to recipient, all the FIIs are likely to file return of income and perhaps depending upon the treaty eligibility, claim the refund for excess dividend deduction. Now, when it came to FDI, my own promoter shareholding, there was no such strings attached. 195 itself covered my case, and hence you could have taken rates of 5%, rates of 10%, depending upon treaty. In order to get over or this mismatch is in the law, they heeded to representations made by FIs and made a specific amendment. This amendment proviso says requirement of both the condition that this agreement referred to, that is DTAA, applies to pay, and payee has given a tax residency certificate. Now, if these two conditions are satisfied, payer himself can now take cognizance of treaty benefits to FII. Now, what does this mean? What does this mean? As a payer, you need to satisfy both the conditions. One, that you have a TRC of FII, and second, that you are entitled to treaty benefit. Now, entitlement, that is your treaty benefit, that is DTAA, applies to payee. Now, this can be a very tricky condition. Now, to a payer, one has to really see what kind of risk appetite is left with payer, because standard documentation, that is how as a payer, and you may have 400 FIs, 500 FIs, 1000 FIs, depending upon the listed company and the stake of non-residents in your company, you will have to now take a call as to whether you go with a standard practice of getting TRC, getting those standard declarations that you satisfy all the anti-abuse provisions of the world, and on that strength of those declarations, now start giving treaty benefit. The law is yet to be tested. Maybe effective 1st April, one will come to know what are the positions which industry is likely to take. Bombay High Court, in one of the decisions, have taken a view that if there is a declaration, that declaration, that is TRC itself, is the proof of beneficial owner. One does not know how one will deal with these probable scenarios. To a payer, if the question is asked that prove that this FII is entitled to treaty benefit, except declaration or some opinion which FII may furnish, there is nothing beyond which payer will have with him, and it is going to be a catch-22 situation, because if you go wrong or if mere declarations are rejected, the delta is 15%. Therefore, if you see on the screen, on an average, 10% appears to be a likely condition if an FI is coming from Singapore, 5% if it is Mauritius, 10% if it is Netherlands, vis-a-vis a peak rate of 23.92%. So it's nearly 14 to 15% is the tax delta. Whether an company, whether listed companies are likely to bite the bullet or not, time is likely to say. While amendment gives a snapshot view, it has given what FIIs have asked, but the amendment are not holistic. Perhaps what government could have done is that made a specific provision that for TDS purpose, it should have been 10%. What rate is applicable to FIs can be a separate topic altogether. Now, if that amendment would have been made in 196D, saying that deduct at 10% under domestic law, or continue the vein with the provisions was, that could have been a greater comfort for listed companies to give the intended benefit. Now, here it is going to be an extremely messy situation, because if you now go ahead and don't give a benefit to FIIs, you would be answerable. You would be answerable to some SEBI grievances. You would be answerable to your shareholders. And one does not know how the law will play after you would have given the treaty benefits to FIIs. This is one question which time will tell. It's an half-baked amendment. You gave what FIIs wanted, but as a deductor, now you have given created a lot of uncertainty in the minds of deductor, whether I should bite the bullet or I continue to maintain status quo, because a complaint which was for legislature, because if today somebody asks you that why you are not giving treaty benefit, answer was law was not clear. Tomorrow you will have to say that I am not sure whether you are entitled to treaty benefit. I am not willing to take all this risk concern. An open position which one will have to wait and watch. I will not take more time on FIIs, etc. It's applicable to few. The slides are self-speaking. There are cases where companies have declared dividend. They will come up for payment in month of Feb and in month of March. To them, the question would be that even if you want to give treaty benefit, whether the provisions are applicable or not. On face of it, it is retrospective. It is applicable from FY 2021, but the law is in the making. If you want to give benefit, 294 says that provisions proposed in the bill before the parliament or the provisions which are in the act, whichever is favorable. If you reconcile, there is a possibility that as a deductor also you can give benefit. But if you equally want to deny the benefit to FII, say for the reasons which we mentioned, at least maintain consistency with all the listed companies with what they have done for FY 2021. Perhaps there an argument would be that law is in the making. 294 only applies to SSE. To the deductor, one does not know, because I need to go what the schedule says. Schedule 2 to Finance Act 2020 says. There being no such amendments, no such enablers as contained in 294. So debates, the arguments are open. One will have to see what positions each of the companies takes as they evolve. But this is going to be a multi-million-dollar litigation. This the gravity can be much more than what we have seen even in cases of software payouts. Any questions, or how do we take Siddharth in terms of the questions?
So Bhaumik, we have a relevant question. If you can see the chat box, and I'm happy to read out because it pertains to this section.
Yeah.
And
But Kushal do have a valid point
yeah.
when he says that whether the amendment is restrictive to only 196D or the canvas of the amendment is wide enough. Now, if I see the way in which the language is worded, the 196D itself makes 1% applicable for all the income stream, to which there is a proviso which is added, which says that you can consider the benefit of treaty. So in terms, Kushal is right that it should ideally be applicable for every other income. To that extent, I would agree with what Kushal is trying to indicate in terms of the questions. Now, moving further, there is a very important amendment when we look at equalization levy. I think we should focus more time on this amendment because the applicability at large may be to many taxpayers. One also have to understand what are the wires or what are the boundaries within which this law will operate. Or if I read the law very, very loosely, very, very lightly, then this law does not have any boundary. Every and any person can be captured in this particular provision. Now, as we take this amendment, let's understand the scope or the points which I'm trying to address. What we are addressing at this moment is EL read with amendments. We are presently not addressing other problems which have not been addressed or which have been represented but not been catered by legislature. We are not addressing whether EL will override tax treaty or this is something which will run in parallel to tax treaty or the other problems which were there in terms of definition, etc., etc. And hence what we will try to deal with is only amendment, implications of amendment. When I read this amendment in light of various other provisions, how does this law look like? Now, before we go on to this provision, a small background of equalization levy. This may be for benefit of all so that we can just come to what the amendments were. Now, equalization levy, offshoot of Action Plan 1 recommendations. 2016, one set of provisions was introduced. In 2016, law says that if you are making payment for online advertisement for some digital space or some services in connection with online advertisement, then equalization levy at 6% would be applicable. Law was largely similar like TDS, that a deductor should deduct it at 6%. Having deducted at 6%, income was exempt in the hands of recipient. Now, this is what the law was when we look at 2016 amendment. Quite surprising, in 2020, provisions of equalization levy were introduced, not as part of bill. So unlike the benefit which we all are having today, where our provisions are discussed threadbare, unlike a possibility where a lot of people will be making representation for this particular levy, that was introduced at the time when Act was enacted. So from bill to Act, at that point the provisions was introduced, and then one saw the first glimpse of the provision when law became Act, and therefore there were numerous uncertainties. Representations was made. In between, Revenue Secretary stated that the law is so very clear that it does not require any FAQs. So we lived with that so-called clear law, and we entered the budget of 2021. Expectations were there that a lot of amendments will happen, a lot of hue and cry, which was natural because if the law has to be applicable, it's not as if that tomorrow, because if you see the rules, etc., it's extremely difficult. So for last quarter, pay the tax itself on last quarter. Now, business does not run the way in which perhaps the lawmaker envisages. But be it as it may be, nothing great, no great redressal for taxpayer. In fact, the amendments which are made is largely tilting towards a possibility of garnering more revenue, making law more open. And what we are told in memorandum is to reflect the intention of government, which it was always was, introducing certain provisions. Let us see, let us understand to what extent the law moves. 1050 was amended because what was the provisions? If the payment was subject to ESS, which we will loosely use for e-commerce supply or services, and it is taxed at 2%, Section 1020 exempted those income. Now, for the year in which this FA 2020 was introduced, there was some kind of dichotomy. One did not know whether both the provisions will run in parallel. That is exemption which was provided was told that this exemption will be applicable for FY 21-22 from FY 21-22. So for FY 19-20, one was not clear whether the payment which are subject matter of EL would also be chargeable, and what will happen to those payments on which otherwise TDS was deducted. Now, this was what the law was there, and hence there was some kind of doubts which was levied. That can assessee choose to be governed between Act or EL, whichever is applicable for that financial year. Whether income would be taxed in both the legislature, Income Tax Act, as also in equalization levy provisions. Now, what we have is an explanation has been inserted. Now, explanations 1 to 150 says to provide that income which is chargeable to tax, as royalty or FTS in India, read with DTAA shall not qualify for exemption under 1050. Therefore, what law is now trying to say is that if income is otherwise chargeable under Act or DTAA, we will come to these provisions in subsequent slide. But in sum and substance, what appears to be an intention is that if income is otherwise chargeable under Act or DTAA, because possible that income may be charged at 10%, in that case, this exemption is not applicable. A parallel amendment has also been made in 163, which says that EL provision shall not apply if income is otherwise chargeable as FTS and royalty. When we read both the provisions cumulatively, what law is now saying is that if it is FTS or royalty in nature, it would be charged under Act and not under equalization levy. Now, therefore, what appears is that provisions of Act will have precedence over EL provisions. Now, this in some way does allay some kind of fears impliedly. Now, there was a lot of hue and cry that certain intra-group services, certain technical charges, certain technical payment which one pays between various group companies, whether this would also be subject to EL. To them, the answer is if you are otherwise paying tax by non-resident as equalization levy or as royalty, then in that case, equalization levy will not apply. Pay tax under income tax. For you, the world has not changed. Continue as it is. Arguably, because from 163 of EL provisions, you are taking this payment out, which is otherwise chargeable to tax as FTS or as DTAA, then in that case, it is arguable that for the purpose of computing 2 crores threshold as well, the non-resident who would or who may be subsumed to EL would have to exclude this payment out. Therefore, let's take a case of a group company which is rendering multiple services. And for him, let's assume other requirements of EL provisions are satisfied. For him, he will now have to create 2 baskets. One is a basket which is subject matter of taxation under Act or treaty. And there is another basket which is not subject matter of taxation under Act and treaty. To him, EL will apply. To him, for that residuary basket, compute the limit of 2 crores. If it exceeds, provision of equalization levy will apply. Let us go a bit deep dive. Let us deep dive into this particular.
Bhaumik, sorry to interrupt. There is one attendee who has raised hand. Would you like to take questions in between, or you would want to give a time?
What I will do is we may just put this question for the time being separately. I will cover 1050 amendment. Okay. I will pause. Will invite this attendee on the dais or on the virtual dais, and we can have question. Then we go to the amendments under that ESS provision. I think because I am not done with 1050, it is possible question may repeat. Okay. So let us pause.
Okay.
Now, what does 1050 provision say? That income referred to in this clause shall not include and shall deem never to have been included any income which is chargeable to tax as royalty or FTS in India under this act, read with DTAA. Clarificatory amendment is what law says. Perhaps to those people to whom TDS was always deducted, matter is safe. It is indeed a clarificatory amendment. They should not pay equalization levy. One does not know, like take a case of some intra-group services, some say software payments, assume it is subject matter of tax, assume that it is satisfies the definition of royalty. In that case, the question was that if the non-resident is giving certain software licenses, which is chargeable to tax as royalty under the act, should that payment also be further subject to EL? They say no, it is a clarificatory amendment. Perhaps law is also assuming, based on looking at the taxpayer who have paid EL, that perhaps limited or no cases of intra-group payments have paid tax under EL in year 1 of the 2020 amendment. So they are saying that it is clarificatory, don't pay any tax. One does not know that if a person who have paid tax under EL, what will he do? How will he claim refund? Saying that, look, I wanted to comply law. I was very, very capricious because the person who is responsible for making tax under 204, you have included non-resident also within the purview. So as a company, we have a policy to comply with law. If there is ambiguity, give the benefit to revenue, not to us. To him, how does he get refund for tax which is paid as EL? Relying upon this 1050 amendment, no clarity concern. Second is that the exclusion that income shall not include only income which is chargeable as royalty or as fees for technical services. Other income stream has not been included. Take a case of SEP. Now I am aware as I speak, SEP in terms of substance is effective for is likely to be effective from FY ongoing 2021. The limits are presently not prescribed. So if say by March, certain limits of turnover, certain limits of number of interactions, etc. are being prescribed by law, the law of SEP then comes into play. Now SEP would be different because the under the act, one would have stated that act or treaty, whichever is early, whichever applies. The memorandum itself, while bringing SEP provision, take cognizance that whatever act or treaty, whichever applies. But now EL moves on the basis that treaty does not apply. So therefore, there are numerous payments which may be subject to SEP. Now, to which there is no specific exclusion which is given. Should I now say that the clarification which you gave was in terms of pith and substance? This nature of royalty and FTS was more of an illustrative in nature. So if a transaction is otherwise subsumed to SEP or which does not get benefit of treaty for whatever reasons, that should not be included in EL. To this extent, the law has not given any clarity and law continues to be open. Now, the important term is income which is chargeable to tax under the Act or under DTAA. Now, let's take certain situations to really see what is the meaning of this term, which is chargeable to tax under the Act or under the DTAA. Hina, just can you confirm if my voice is audible and the speed is okay?
It is indeed audible, Bhaumik.
It is audible, yes.
And the speed is okay, right?
Yes.
Yes.
Okay. Now let's look at some of the situation. Now we are looking at a payment which is royalty and FTS, which is chargeable under the Act as also under DTAA. What are the consequences? Exclusion under 1050 is for income which is nature of FTS and royalty. Now if it is chargeable under the Act or under the DTAA, in that case you would be taxable under the Act and you would not be taxable under the equalization levy provisions. Now section 163, which is in a way a charging section or an applicability section of equalization levy. Now the question which we are testing is that we are speaking of payments in the nature of royalty and FTS. To a recipient, I am aware of a special bench decision or a decision which have referred the matter to special bench. It is generally believed that a non-resident can follow cash basis of accounting, that is offering the income to tax, or an accrual basis of method as an basis to offer tax. Now, if such is the case, to them the question would be that in FY 2021, I am offering the income on cash basis, but that money was received in FY 21-22. But the EL payment, the charge under EL provision is received or receivable, that is in a way an accrual basis of accounting. Whether this exception takes care of those provisions as well, or the exceptions is narrow, which is only that both of them should trigger in the same financial year, or if it triggers in different, that is EL triggers in FY 2021, but my cash, that is the income, is received in FY 2022, whether there is any difference in law as far as this situation is concerned. To me, what is excluded is income. Now, if the income is excluded, and what is excluded under 163 is income received or receivable, then one has to start the law from section 163 of EL provisions rather than starting from 1050. If under 163 of EL Act, an accrual based income is excluded from EL provision, it gets excluded in totality. Then you go under the provisions of Income Tax Act. There you have the benefit of offering income on cash basis because it continues to be in the nature of income. Provisions of section 1050 would be applicable, and accordingly, irrespective of the method of accounting or offering to tax which a non-resident follows, to my mind, it will not make any difference. Second is this provision. Under this provision, what is relevant is that whether an income is chargeable to tax under the Act or under DTAA. Now here it is an assessment which NR has to make because equalization levy provisions applies to NR. So whatever position a deductor takes, maybe because he conservatively believes that he wants to withhold tax, all those things are irrelevant. What has to be done is what position a non-resident is taking. Now this is going to give rise to certain problems. Now, as a deductor, it may be possible that I would like to take a view that I am going to deduct certain payment. The matter before, say, a software licenses, etc., is before Supreme Court. I am not aware what view a Supreme Court is going to take. So, therefore, I am going to withhold tax. Now, withholding tax is just one facet of chargeability. Now, a deductor will have to make his own assessment. That is, the NR recipient will have to make his own assessment whether he wants to claim that income exempt applying a Supreme Court decision. Now, if such is the case, then his own return of income, he will claim refund for whatever taxes are deducted. Then he will have to test whether I satisfy the provisions of EL. If he satisfies the provisions of EL, 2% would have to be paid. Tomorrow, if Supreme Court gives a ruling and says that no, this was royalty payment, then he will now be taxed under the Act, and he will now be taxed under the Act read with DTAA, either provisions, because one does not know what Supreme Court view a Supreme Court is going to take. Then in that case, that payment would be out of EL. One does not know how will I claim refund of equalization levy payment. Should I write to the board? Should I write to my assessing officer saying that my entire calculations have changed and therefore this is the position which has to be adopted? Take a case of FTS payments, maybe numerous arguments which are available. Take a case of FTS payment and we will deal with some of them. Now, if ultimate view which I have taken is not chargeable to tax, but if court says that no, this is chargeable to tax, in that case, the difficulty will arise because according to the law, there are two different baskets, there are two different levy, there are two different acts pursuant to which we are taking revenue out of you. And hence there would be some issue problem here. Let's take that EL is not chargeable under the Act or under the DTAA. Now, what view one will have to take here? Now, let's take case where provisions of make available provisions of certain treaty comes into play. India, US, India, Singapore, India, UK, numerous other treaties concerned. Now, to this, if one takes a view that this payment is not chargeable because of treaty, Section 1050 amendment is not applicable to you. Section 163 amendment is not applicable to you. This payment continues to be within the provisions of equalization levy. Some of the exemptions which are available under domestic law. Now, one does not know in what situation this will trigger, but let's read that there are exemptions. Let's read that some provisions of ELs are getting triggered. That is, the law of EL is applicable to non-resident. So if under Act a payment is not taxable because the services are in connection with construction, assembly, mining or like project, in that case, certain scope rule exclusion of 917 will get triggered. And in that case, Section 1050 exclusion will not be applicable to me. Now, interesting point will come up because Act is not applicable to me. because this payment are not chargeable to tax under Act, my claim is that 917 is not applicable, and therefore don't tax me on this payment. But it is possible that this payment may be subject to tax under 44AB. If such is the case, one does not know what will happen, because 144AA payment are taxable in certain situations. Now, if a tax is paid under 44AB, but are not considered as FTS or royalty because of exclusion, it is possible that again the same issue will come up, whether I need to exclude this payment from EL, because 163 is only limited to royalty and FTS. It does not cover all cases. Whether that payment would be taxed twice under the Act as also under EL, that question continues to be open. 917, services exclusion under domestic law. 917, services which are utilized for the purpose of business or profession outside India. Now, this payment again is excluded under Act. I would have liked to take benefit under Act and say, don't withhold this particular payment. It is for my branch which is outside India, for a source of income which is outside India. It has certain tribunal decisions which bless my position, but that payment will again be an open question, because whether scope exclusion of EL will be applicable to me or not, one does not know. So therefore, if these payments are not taxable under the Act, surely it would be taxable under equalization levy. So one law will exclude, another may be applicable. If it is taxable under Act, it is only then that the amount would be excluded. Now, this brings us to the question as to what is then the meaning of chargeable to tax under the Act or TTAA. Does it mean that a payment which is otherwise relieved by treaty is chargeable to tax under Act or TTAA, but it is not subject to tax? To which one will have to see what are the meanings of this term chargeable. If I look at certain meanings of Black's law, it gives a very open meaning. It is ordinary acceptance as applicable to imposition of duty. A burden signifies capable of being charged, subject to charge, liable to be charged. So really gives some kind of vague meaning. Let us look at the next decision. Expression any other sum chargeable under the provisions of the Act would mean a sum on which income tax is leviable. In other words, said sum is chargeable to tax and could be assessed to tax. This is extremely important. Could be assessed to tax under the Act. Let's look at next decision, Maharashtra State. Expression chargeable under the Act and not include an income, which in terms of specific DTAA is not excigible to tax. Now, if we read both the decisions together, what meaning one gets is that chargeable under the Act or DTAA would mean that income on which you are making payment of tax. If you are not making payment of tax on a particular income, it is not chargeable. Therefore, equalization levy is applicable. If your income under the Income Tax Act is not chargeable because of make available, because this is standard service, because there is no human intervention, because there is some 917 scope exclusion, or because let us look at a specific exemptions which treaties are providing. 12.5 say of India-US treaty. Services which are ancillary or subsidiary inextricably linked to sale of property referred to in 3A, royalty payments. Services which are ancillary to rental of ships, aircraft, containers, equipment used in operations of ship or in international traffic. Teaching in or by educational institution. Services of personal use of individuals. To an employee making the payment to an individual or firm, that is where my independent personal service article was applicable. Now, all these are exempt by virtue of 12.5 of treaty, but exemption under 12.5 will relieve him from Income Tax Act, but will not relieve him from equalization levy provisions. Now, this was what was my thoughts on 1050 amendment read with 163 scope exclusion. We can have participants, if there are any hands which were raised, we can invite them on the dais.
Just a minute. Bhaumik, that participant seems to have been disconnected. I think we can proceed and maybe deal with the questions.
Okay.
Siddharth, it was
Sure.
Kiran Kanani.
Mr. Kiran, do you still have a question? Then you can
Unmute him. Or I unmute him.
I've already unmuted him, but
Kiran, you need to unmute yourself. Very well. Any other question? I move forward.
Sorry, it was inadvertently the hand was raised.
No.
Sorry. Yeah.
no worries. No.
We move further. Any questions? Then we pause here. Only on 10:50. Other parts of EL we are taking it. Then anybody can raise hand or we proceed further.
So, Bhaumik, no other questions in the chat box or the Q&A box?
Very good. Very good.
Okay.
Just a second.
Sure.
Okay. Just confirm, Siddharth, if the screen is again visible.
It is.
Now, friends, a small request to each one of you. As we go through this discussion, you may keep this EL provisions on the screen if that is possible. Income Tax Act does have, it's a pre-amended, and I'm sure post-amendment FB Finance Bill you would be having with you. From here, we are trying to see certain propositions. As I said, these are my view. As I said, it may not be what the intention of law is, but there is no harm in testing certain propositions. Therefore, let's look at the amendment in e-commerce supplier services. Now, the law on e-commerce supplier services is like this, that is 2020 amendments, that if there is an e-commerce operator, which law is defined, renders certain e-commerce, online e-commerce, undertakes online sale or provides online services, or undertakes certain e-commerce supplier services, then 2% is the equalization levy. So it is a charge on non-resident. Unlike 2016, there is no tax withholding, etc., which has to be done. So as a user, he continues to interact with the e-commerce operator the way in which he was erstwhile. To an e-commerce operator, he will have to see what my world looks like when we look at the equalization levy law. Now, what is therefore important is the definition of e-commerce supply or definition of e-commerce services. Now, law says something like this, that e-commerce supply or services means online sale of goods owned by e-commerce operator or online provision of services provided by e-commerce operator, online sale of goods or provision of services or both facilitated by e-commerce operator. Very, very important, because time and again we will come back to this definition. One is a very simple view which I will express to begin with. Read this definition time and again. Keep this definition in front of your screen. Online sale of goods or provision of services or both. Look at the species which law is trying to cover in limb 1, limb 2, limb 3 and limb 4. Limb 4, any combination of activities listed in 1, 2 and 3. Therefore, if you are following, if you are rendering any one of those services, you are satisfying the definition of e-commerce operator, you are subject to equalization levy. I am assuming that 2% threshold is being, the base threshold of 2 crores is being satisfied. Now, what law says is that in order to clarify the intent of law, which was not coming very clearly, they have made certain amendments. What are these amendments? Online sale of goods, there are some case studies through which we will test certain propositions. What we can do is that if there are questions, you may put it in chat box. If somebody wants to participate, they may raise the hand. After a particular case study is over, or maybe when we pause, we will open up the discussion. And at that time, the questions can be addressed. Online sale of goods and online provision of service shall include one or more of the following activities. So law is very clear that this can be one of the activities. It need not be all the activities. The confusion was that when the law used online sale of goods, the question was that will you only cover digital transaction, or you intend to even cover physical transaction? Or you mean to say that when all the activities have substantially happened online, whether that is what is supposed to be envisaged. Therefore, if I buy certain iTunes from Apple on a particular platform, that is a digital transaction. I select the tunes, I make the payment, I get the tunes and I use it. Everything happens online. Or is it a case where you have got some global Amazon or an Alibaba In that case, whether it is even covering those cases where I browse their own website, select a new pair of shoes, and click a particular icon, and then the goods are then delivered physically. Reference was made to Sale of Goods Act by various authors, saying that no, it only covers those cases which are online, that is everything completed online. So the scope was proposed to be significantly diluted, to which I believe the law says that our intentions was not coming out clearly, and hence according to them now it will come out very clearly. And an explanation has been added that online sale of goods and online provision of service shall include one or more of following online activities. Online activities. Acceptance of offer of for sale, placing of purchase of goods, acceptance of purchase of goods, payment of consideration, supply of goods. We'll come to this somewhere in some moments from now. Second one was that 165A is a charging section which says that there shall be charge EL at 2% on amount of consideration received or receivable by an e-commerce operator from e-commerce supplier services made or provided or facilitated by it to an Indian resident, NR in specified circumstances, or a person buying goods or service using an Indian IP address. Very well. The question there was, what is the quantum on which you will charge equalization levy? So if there is an e-commerce operator who is merely a market-based platform earning certain commission payment, what would be the amount on which you will charge equalization levy? So if Siddharth lists his goods on that particular platform, Siddharth is not an e-commerce operator. He does not have requisite infrastructure to qualify him or to elevate him to an e-commerce operator. And 100 rupees or $100 of payment goes from India to that e-commerce operator. The question was, what is that consideration received or receiving? Perhaps to address this question, an explanation has been added, which law believes will now take care of it, that consideration received or receivable from e-commerce supplier services shall include consideration for sale of goods, irrespective of whether the e-commerce operator owns the goods. Consideration for provision of services, irrespective of whether service is provided or facilitated by e-commerce operator. So therefore, according to the law, what it now seems is that irrespective of the person who provides, whoever receives the consideration will now be subject to EL. Read on a very plain bleeding, a simple conclusion is, whether right or wrong, one does not know, that assume something like this, there is an e-commerce transaction which is taking place. There is a user who is ordering goods of $100. $2 is the commission of e-commerce operator. $98 is something which goes to the seller. Now, if you read the law the way in which it is, to which we will question, to which we will analyze, the rupees 100 is the consideration subject matter of EL. 2% is what is my piece of cake. You don't earn anything except goodwill. Give me that 2 rupees of commission to me as tax amount, and again, hence go be happy, because this is a very simple method to compute tax. This you can't get a regime which can be more simpler. Gross amount 2 rupees, 2% as a levy of tax, and that's the end of the matter. To a seller, answer is that you need not pay tax because you were never an e-commerce operator. In any case, we have recovered tax on that 100 rupees. You will not get any further law which is as simple as this. And hence, this is an ease of doing business, if at all one can qualify. The beauty in the way in which, or whatever conclusions comes up is, and this is an honest submission which I have, the way in which the laws are worded, it is an extremely dangerous phenomenon. Even look at the tacit admissions in the memorandum, that we ourselves could not communicate clearly what was in my mind, but you expect the assessee to clearly understand what the law was, and more importantly, comply with the law. Because if you don't comply with the law, we will levy interest, we will levy penalties, so on and so forth. We'll come on the drafting of the law in a later point, because these are extremely dangerous trend. The intention of the lawmaker is left to the lawmakers. Maybe they will come at any point in time and clarify what their intentions are, but they will go back in time and ask you to pay tax. Now here, The view was prior to this equalization levy amendment is that it is only on net amount. Now the law is retrospectively, so it will apply from FY 2021. So therefore, we will tell you what our intention was. We will tell you in pieces. We will tell you in bucket. We will tell you whenever we feel the need was so intense. But to those people who have complied with the law, thinking only net is the consideration, and if at all we believe that the wordings of law will test the water, to them 100 rupees is the base amount, not the net amount of consideration. Whatever it is, whatever you would have received at a gross level, pay equalization levy on that gross level. Now here it is possible that my commission is also not equivalent to reach the EL level. Even so, be it as it may be, you need to pay, you need to keep a decent margin. To that extent, the law continues to be retrospective. To that extent, even when we go through the certain niceties of the provision, one still does not know what the law is trying to clarify. Just let's look at some of the amendments first before we go to the various provisions. Now, first is that the charge is on 165A, amount of consideration received or receivable by an e-commerce operator from e-commerce supplier services in specified circumstances. Now, this ESS which you are seeing on the screen has now been amended, has now been expanded to include following activities: acceptance of offer for sale, placing of purchase of goods, acceptance of purchase orders, payment of consideration, supply of goods or provision of services partly or wholly. Okay. So now what we are seeing is that to what extent the law will impact various parties. Now there is a second limb on the left hand side of the screen: equalization levy payable by NR in respect of transaction with another non-resident only in those specified circumstances. This limb covers NR to NR transaction only in the specified circumstances. What are these circumstances? Sale of advertisement, which targets a customer in India; sale of data collected from a person who is resident or from an IP address in India. The question is that whether this limb in fact is impacted by any of the amendment concerned. Now, this second limb on the screen is first qualified: consideration received or receivable by EOP, that is e-commerce operator, from ESS. Now, ESS definition is definitely amended to cover following limb. So let's take that sale of advertisement or sale of data which is happening on a hard disk. It is not happening online. But somebody books a particular thing online, or it's just a repository where I make a selection, I place a particular order, and thereafter the things are delivered. Let's assume it is not online. The question is whether any of the limbs would be applicable or would not be applicable when it comes to equalization levy. To which, according to me, when you look at NR to NR, you need to satisfy the requirement of specified circumstances. Now that specified circumstances has within its limb sale of advertisement. It has within its limb sale of data. Now there is no amendment in specified circumstances. Now mere receipt, placing of purchase order, mere acceptance of sale perhaps does not give rise to sale. A sale happens and sale is nomen juris. What I mean by, just a sec. Now, what one mean by sale is something like this: that under the Sale of Goods Act, sale happens only when various conditions are satisfied. There is a buyer, there is a seller, there is a delivery, etc., which is taking place. So, merely listing of one of the activities, to my mind, does not amount to sale, and hence, in my view, this specified circumstances, the limbs or an NR to NR transactions, in my view, is not impacted by an amendment concern. There may be thoughts, surely yes, but if it is sale of data, if it is sale of advertisement, sale does not take place in anyone merely because one of the limbs is present. Yes, if all the limbs are present, and indeed there is an online sale which has taken place with other limbs present, which one can definitely say take a case, I am downloading certain reports which is pertaining to Indian Stock Exchange from some fund manager in Singapore. In that case, if download also happened online, payment also happened online, I selected what kind of report I wanted. In that case, it is possible that NR to NR transaction may take place and a requirement of ESS would be clarified. But this would have been even without this particular explanation. Take a case where I am going on IBFD and reading some article written by Siddharth. Some non-resident wants to purchase that article. So he goes to IBFD, purchases that article. It is written by a person, information what I say, information which targets a customer or relating to a data which is collected from an Indian person, possible that it may be subject to EL. But when we are looking at the amendments, the activities, that activity per se, one of the activities done, others not done, that does not impact an NR to NR kind of transaction. Now, moving further, let's go and see to what extent the amendment impacts and whether the conclusion changes. As I told, a simple conclusion in this case is, what is the example? I've got a user who uses a particular app of, say, an Alibaba or an Amazon, assume a non-resident person. They list various vendors. I select one of the, say, a cell phone from one of the vendors or some computer or whatever. In that case, my order is placed online. I select, I agree on delivery date, everything happens online, and I make the payment. Now, e-commerce operator will get 2 rupees of commission from this particular person, which is the seller. 98 rupees will go to seller. The question is, first of all, to what extent equalization levy provisions will apply? Is the example clear? It's just a typical marketplace model which we are trying to see. We are trying to test what extent the amendment would be applicable. The first question is, who is an e-commerce operator? Because I need to see to what extent equalization levy provisions applies. The second question is, what is the impact of amendment of ESS? And then the third question is, what is the consideration which should be subject matter of equalization levy provisions? Who is an e-commerce operator here? Now, e-commerce operator means a person who maintains, who owns, maintains any electronic or digital platform or a facility for the purpose of online sale or online provisions of services. In this case, Mr. Seller merely listed the product on Amazon's or Alibaba's website. He does not have this requisite infrastructure. Therefore, seller is not an e-commerce operator. Now, why this conclusion is important? Now, if your conclusion is that ₹2 is chargeable in the hands of EOP, and even the seller is an e-commerce operator, then 98 is chargeable in the hands of seller. How the law changes? What difference does it make? 100 rupees charged, different amount. Overall taxation continues to be the same. But in facts of our case, seller is not an e-commerce operator. It is only an Amazon or an Alibaba who is an e-commerce operator. Therefore, this conclusion is extremely important. Now, the charge is on an e-commerce operator who provides or who receives any consideration for e-commerce ESS, that is e-commerce supply or services. Therefore, the next question is, what is that e-commerce supply or services which I am doing? I need to go back to the definition of e-commerce supply or services, read the definition, read the explanation together, and answer certain questions. Which of the limb is applicable to me? Now, this is extremely important, that which of the limb is applicable to me. Limb 1 is applicable to online sale of goods owned by e-commerce operator. In my case, I am not owning any of the goods. It is the seller which is owning. Therefore, limb 1 does not apply. Second is online provision of services provided by e-commerce operator. Now, look at the word online provision of services. Okay. Now, am I providing services? Yes, no, one does not know. Because what am I doing? I am only giving a listing to you. Am I providing any services to you, or am I facilitating a transaction for online sale or online provision of services? To me, in a marketplace model, the limb 3 is better limb to be covered. That online sale of goods or online provision of services which is facilitated by e-commerce operator. Now, here is a case where seller registers himself, buyer registers himself. I am not giving any services to you. I am not giving any services. I am only facilitating a transaction between two of you. So therefore, it is limb 3 which is applicable. Now, I see what is the impact of amendment. What is the impact of amendment? Just now, earlier the thought was that if everything happens online, then only you can say that it is e-commerce supplier services. To which I will say that no, that is not what the intention of law is. Any one of the limbs taking place, acceptance of offer for sale, who accepts one does not know. Ideally, whether an e-commerce operator or seller accept, what is the thing which law is trying to cover? Maybe both, because limb 3 and limb 4 covers services which is facilitated. Limb 4 is a combination. Now, if I am facilitating two person, then perhaps even I am facilitating an acceptance for offer of sale. So even if therefore seller accepts the offer for sale, it may fit within this explanation. And purchasing of goods, perhaps yes, a buyer bought the goods on a particular platform, acceptance of order. So I will say that even though your goods were shipped from a particular warehouse, even though delivery happened in India, then also you will fit within the definition of ESS. This is only the limited role of this particular definition. Therefore, I now need to see that I now satisfied two of the limb. Therefore, the charge is attracted. The question is, what is the consideration which would be subject matter of equalization review? Now here, look at this definition on the screen. That EL shall be charged at 2% of the amount of consideration received or receivable by an e-commerce operator from e-commerce supplier services made or provided or facilitated by it. Therefore, I need to answer what is the consideration which I have received and what is the limb for which I have received the consideration. To a marketplace model, this is the way in which perhaps a law can be read. Amount of consideration received or receivable for ESS, received or receivable from e-commerce supplier services facilitated by it. Surely from ESS facilitated by it. Now, then I look at the charge. Then what is that consideration which I have received? I would still say it is commission. Let us look at to what extent this explanation impacts me. They say consideration received or receivable from ESS. Yes, it is from ESS because it includes one of the activities. We'll come to attribution later because now we are, whether anything changes for me, we'll come to attribution later. From ESS shall include, the law says consideration from received or receivable from e-commerce supply or services shall include consideration for sale of goods irrespective of whether e-commerce operator owns the goods. Okay. What is the transaction concern? There is an e-commerce operator who is not owning the goods. Okay. Consideration of sale of goods irrespective of whether e-commerce operator owns the goods or not. Now, to which, what is the limb which is applicable to me? It is consideration received or receivable by an e-commerce operator from ESS facilitated by it. Now, whether the consideration which is received from ESS, you may include a limb which is you facilitated. But what is the consideration? Now, there is a difference between amount and there is a difference between consideration, which 165 itself uses. Now, let's read the law this way. EL shall be charged at 2% of amount received or receivable by EOP from ESS. And then let's look at the expanded wording. Perhaps it could have made sense saying that amount includes your own commission, amounts include something which you would have otherwise also be responsible for paying to third party. Now look at the second link. Consideration for provision of services irrespective of whether services are provided or facilitated by e-commerce operator. In first limb, this facilitated by e-commerce operator is missing. They have not stated irrespective of whether goods are owned by you or irrespective of whether you are facilitated or not. Therefore, if my view is that I fit within the third limb of ESS, that is the facilitation is what I have done. I have not rendered any online. I have not provided any online services. Therefore, in this case, third limb is applicable. What is the consideration which I have received? Consideration which I have received is only 2. Now, as I told you, irrespective, look at the last bullet. In limb 2, in limb 1 does not, irrespective of whether services is provided or facilitated by e-commerce operator, is not specifically stated. Again, they say that consideration from e-commerce. Now, from indicates live nexus. That it has to be from that activity which you are doing. Now, what you are doing is merely a facilitation function. Therefore, when I look at the law on a collective basis, it is still possible to argue, and I know what am I speaking, it is still possible to argue that it is only ₹2 which should be subject to EL and not ₹100, not because what you intended was not clear, but what you intended does not form part or does not form, is not clearly covered by the explanation which you have inserted. Explanation says consideration received or receivable from ESS shall include. Shall include what? Consideration for sale of goods, irrespective of whether you owed or not. Now, it is whose consideration? Consideration is of seller. You can't say that it is consideration merely because you made payment to me. It should have been amount. But your amount and consideration both have been used. Therefore, it has to be something which is what is merits to me. Plus in definition also, first limb only consideration for sale of goods. To me, what you paid was never for sale of goods. It was only for certain services, certain facilitation services, which is materially different than what is covered in limb 2. Limb 2 covers provision of service. Now, provision of service would mean services which are provided by e-commerce operator. And perhaps look at the wording, irrespective of whether services is provided or facilitated by e-commerce operator. So therefore, I would still believe that when it comes to sale of goods, there may be an argument concern to say that it can be only net consideration. Let's test this argument where somebody is only a market platform for provision of services, Urban Clap or something of such similar, Ola, something of such similar nature. Even in that case, I would still say that then what is the meaning of consideration? Is it for provision of service? No, I am not doing the service. Maybe it is some third party who is listed on website is doing the service. Then look at the term, irrespective of whether such service is provided or facilitated by e-commerce operator. That is okay, but it still has to be consideration for services. My consideration is only facilitation. It is not. It is not as if that that my consideration is of something else. Your definition of ESS, which is the main provision concerned, your definition of ESS requires you online provision of service. Here it is not stated whether the services would be provided by you, whether it would be facilitated by you. So what 165A, the limb in 165A, what is there in ESS? There is a lot of discord which is there, and that discord will give rise to some result which perhaps may still result in the same conclusion which was there in a pre-amended law. I am aware of certain bold statement, but I do still believe that argument continues even in the post-amendment law. Any thoughts only on this case study? I will go to other case studies. We'll go to an hotel booking kind of case study. Any thoughts?
Bhaumik, just a quick one. I know you specifically mentioned that this is your thoughts and viewpoint, and why still the consideration would still be restricted to an amount of 2. But where do you feel the explanatory memorandum or the anything in the them trying to now clarify the provisions, if this were to go to courts 5 years down the line, how do you see that playing out?
See, the golden principle of interpretation, if that has any place in interpreting of ELs, which I believe should have, because it is still a tax. You can't deny it is not a tax. You may say it is levy, it is whatever it is, but it is still a tax. That the charging section has to be neatly worded. If there is ambiguity, it goes back to the text. B, memorandum will help you to assist what is the intention of law. But if that law is not backed up by a particular amendment, then the law has to be amended to that effect. We all will recollect what happened in 2007, what happened in 2010. Most of us would have been students, but there was some Ishikawa decision which was there, which said that for 917 to apply, that services should also be, I don't know the exact word, but performed in India or something which was there, to which they brought one amendment. Explanatory memorandum was very clear, to which they themselves realized subsequently, and of course that was what was the view, that the language which was stated in explanation to 917 is insufficient. So Ishikawa IHI decision does not change. Therefore, that's how the law is, and there are too many instances where even if you say something in memorandum, and there are many decisions, judicial precedents on this, that till the extent you don't amend the law clearly, explanatory memorandum has limited value in creating the charge which is otherwise not covered by the language of law. Yes.
Thank you.
Yes.
Bhaumik, another thought I'm just trying to put on the group. What if some argument can be placed on that point, that there are certain e-commerce operators who record the entire sale as their sale. So if I take for an example of Myntra, whatever sale it does on that platform, it records it at its own sale in its books of account. Will that make a difference?
It's like this. Uh, if see, let's look at what you are saying is, and there are two statements which you made, that while you are not the owner, you are not making the sale, but for books of accounts you are including. That means there is no sale which has taken place. It is a different way of recording commission. I don't wish to take forward, but there is a lot of literature in Ind AS 115 which gives you some kind of indication of whether in what situation you can record on a gross basis, in what situation you can record on a net basis. Suffice to say that if it is not sale and merely you are recording it, but then you can always say gross receipt. You need not use the word sale of goods, right? If such is the case, then conclusions may be same. But if it is sale indeed, it may be a flash transfer. Then conclusions may be something else.
Okay. Just I was just exploring this a wild thought. There could it could be named as gross receipts. It could be named as sale of goods also for that matter. Maybe the e-commerce platforms, they get a lot of valuation based on the amount of sale being transacted
Very
on the
well.
platform.
But sale
So
of
that
goods,
was the thought process
sale
behind
of
it.
goods as per Supreme Court in Dunkley decision is a nomen juris. So whenever you use this word sale of goods, establish even precedents under Income Tax Act. Whenever you are using this word sale of goods, go back to Sale of Goods Act. There are some discussions that now Sale of Goods Act has some enablers which would also cover this what I say e-commerce transactions or not. There is some commentaries which are written for this purposes as well. So once sale of goods is written, go back to Sale of Goods Act. There is no other legislature which can govern.
Okay. Okay. Thanks, Bhaumik.
Next case study. Seems all right. Let's look at let's look at this place. What we are trying to do this is that this can be intra-group transaction, intra-group things also which would be happening. This may be non-intra-group, but some frequent practices which we see. Let's take a case where I am a distributor. I have a just-in-time inventory management policy. Everything is automated. I have certain nodes which are connected with my warehouse system, and I've got nodes which are also connected with some portal which my supplier is giving to me. So if an inventory drops below a particular threshold, automatically order is triggered to system. Automatically order is received and accepted by supplier. You will get an email also from supplier saying that your shipment is delivered. You will get it in XYZ. It will get it in XYZ days. Now, when you are getting in XYZ days, that's how the question would be that whether this transaction now also is governed by equalization levy or not. The question there is, look at the definition of e-commerce supply or services. Now, e-commerce supply or services has following limbs within it. Online sale of goods owned by e-commerce operator, online provision of services provided by e-commerce operator, online sale of goods or provision of services facilitated, any combination. Now there the argument pre-amendment was that no, online sale would only include those things which are predominantly covered online. Merely because you just order something online, but the goods are delivered physically, title passing in India, that is not something which would be covered by the scope of e-commerce ESS, and therefore should not be subject to equalization levy. To which now I have to superimpose this particular explanation, and hence I will have to say that online sale and online provision shall include one of the following activities: acceptance of offer for sale, placing of purchase order, acceptance of purchase order, payment of consideration, supply of goods or provision of services partly or wholly. Now there the question is that now can I say that these arguments are over? Merely because there is some automation which is there at vendors level, merely because my nodes are connected, my softwares are connected, I press the button and I get an automatic order placed, I am now covered by ESS provision. Plain reading, answer is yes. But is that the conclusion is what we have to test. Now, if participants have this have this bill with them. Uh, just hold on. As I say, participants, I'm finding my own copy. Yeah. Just hold on. Yeah. Now, as I said, that there are three limbs which you need to satisfy for equalization levy to apply. Are you an e-commerce operator? Are you qualifying as ESS, that is e-commerce supplier services? And the last limb is what is the consideration which is received or receivable. Now, to which we will need to see whether in this case this person is an e-commerce operator or not. Now, e-commerce operator definition is something like this. E-commerce operator means a non-resident who owns, operates, or manages digital or electronic facility or platform for online sale of goods or online provision of services, is or both. Now, friends, ESS definition is like this: online sale of goods, online provision of service, and you have got explanation which is added. When this explanation which is added, the bill specifically says something like this, that explanation itself says, for the purpose of this clause means only this which you are seeing, e-commerce supplier services. Now, when you look at the definition of EOP, the definition of EOP says, perhaps ERP system may qualify that it is some kind of platform, it is some kind of portal. Perhaps you as a buyer can even go there, monitor where my goods are, when I will get the shipment, what is the payment status, what is the outstanding inventory, all those things. So there can be a portal. But then the question is, are you satisfying the limbs of EOP? There may be a portal, but it has to be for online sale of goods, for online provision of services. This explanation is not incorporated here. Therefore, if only some of the activities which are happening place, can you thou say that still it is still the law continues to be as it is? Online sale of goods has to be looked from the meaning which was given under Companies Act, which was the open thought, which were some of the thoughts. Because these things are not amended, because this is not amended, I would still say that yes, it is ESS, but your definition of e-commerce operator is not amended. Because your definition of e-commerce operator is not amended, what you could have done is defined what online sale, what online provision of services was. In that definition, you could have included various activities which are there. And hence, can I thou say that while I satisfy the definition of ESS, I still don't satisfy the definition of EOP, and therefore equalization levy should not be applicable. These are emerging thoughts. You see, many people are not paying equalization levy. To them, they believe either the treaty will override or we don't agree with this law. We were not aware. We were not aware of this law. To them, all these defenses are likely to be handy. So while this may be emerging thoughts, this may be some thoughts which can be sidelined, possible. But in cases where question would be that why you didn't pay equalization levy for all this transaction, this arguments may fall handle, may be handy. Any thoughts on this points?
Bhaumik, we have a comment in the Q&A box by an anonymous attendee saying that then after amendment, what does the word irrespective mean? Would
I'm
they
not
become
getting the
redundant?
context of amendment. I did see if the gentleman would like to speak, happy to invite him, but I'm not getting this comment. So. Any other question on this proposition? I am aware, but I'm just putting out some thoughts which are there. These are not final views. These are all emerging thoughts. On a plain reading, everything is now taxable. But whether the plain reading is a real reading and what will be the ultimate outcome, because you made some limited amendment. You left out other provisions unamended. You defined certain things, but the question was always on the meaning as to what is the meaning of online sale. That you didn't define, that you didn't amend. So one will have to see how the law will play when we look at these open points. Any further points? Should I move forward?
Yes, please.
All right. Let's look at this example. And this example has 2-3 nuances. The typical example which one used to debate that, oh, I am booking online on a particular portal for certain hotels in some Mauritius. In that case, whether this hotel or whether this portal would be subject to equalization levy or not. Now let's take that there is a hotel which itself is a portal. Okay. Now hotel sends certain email for booking reservation. So we send emails. Now I book this particular hotel. Now room tariffs are agreed. There is certain dining services which is not included in tariff. This is an MAP plan, but I continue to have lunch there. So I pay from my own pockets after going there. There is certain spa and recreation activities which I like after going to that hotel, which I pay there. But everything I happen is payable when you close your visit, payable at the time of checkout. To this, the question is now how the law will now read. Presently, I have not taken an e-commerce operator. I am saying that hotel himself manages a portal. So therefore, we are not speaking of two distinct identity where hotel is listing itself with an aggregator. But this is a case where hotel himself has a portal. We change the example to aggregator once we are done with this example. The question here is that whether EL applies. You will say yes, it does apply. The question then is that how and to what extent, what is the quantum on which the provisions of EL will be applicable. Now, ESS means acceptance of offer. Yes, you have accepted the offer. I have booked it. You have accepted my reservation. So perhaps, yes, in any case, it was online portal. So this would be satisfied. But which limb otherwise, because explanation only qualifies, it will include one of the activities. These are not activities per se which will result into ESS. They merely say that online sale of goods and online provision of services will include following. Therefore, which are the limbs which are qualified? 1, 2, and 3. Online sale will include so and so. Online provision will include so and so. Fine. So we will not dispute. But the question is that what is the amount on which you will charge? Consideration received or receivable by EOP from ESS, made, provided, or facilitated by it. Then what is provided by it? Provided is online provision of service. I am staying in hotel. Is it an online provision of service? Answer is no. If at all, what you did was you just give me certain booking. I went there. I saw what is there on the offering. I bought certain, or rather, I bought certain lunch plans or whatever, eatables or whatever it is. I went to spa. I enjoyed certain services. Clearly not online. Are you saying that it is facilitated by e-commerce operator? Answer is no. It was not facilitated by him. There was nothing. E-commerce operator means a person who owns, manages a digital infrastructure very well. But what is the consideration? Consideration from ESS. It is not as if all considerations are falling part of it. So in this case, if everything has happened still, everything has happened still at ground. Because what is the explanation saying? Consideration received or receivable from e-commerce supplier services. Look at the first list. Is it goods? No, clearly no. If I'm hotel is a service, it is not goods. Consideration for provision of services irrespective of whether services is provided or facilitated by e-commerce operator. Now here when I read this explanation, the first question comes is that how should I read this explanation? Now I do invite your attention to the bill. They have said clause A, insert after clause A, the following shall be inserted. Consideration received or receivable from e-commerce supplier or services shall include following. Now, when you are using the word from e-commerce supplier services, then it is not as if every consideration, it should only be online. It should be online. It should be online provision of services. It should be online provision of services which I am facilitating. This limb is not powerful enough to take care of any services. Consideration for services, yes, hotel received consideration for services, but it has to still be online, because what are you qualifying? You are qualifying this consideration received or receivable from e-commerce supplier service shall include following. Therefore, it is only ESS which shall include services. One does not know that if something is done physically at a level of hotel, how can you say that this now post explanation to an hotel, everything will now become chargeable? Number one. Number two, if no amount has been paid, because what will I do? I book the hotel. I don't pay any commission, etc. to the hotel, because he's just giving me a facility. My terms are also, and I'm taking a peculiar example. It's not as if I'm making a payment before time. I'm saying that I'll pay at the time of checkout. Hotel is acceptable to that proposition. Therefore, there is nothing which is paid online. To this extent, what is that consideration? Which is from ESS. In that case, service, what is the service? Service was enabling me booking. To what extent, law does not define. Can I attribute, can I apportion? There is no mechanism which is provided. So in this case, the question will still continue to be, having so amended the law, please tell me what is the amount on which EL has to be paid. If you can't apportion anything because government has not provided any mechanism, if it continues to be, all your limb continues to be for online provision of services, then how do the physical provision of services which is captured here? Now, I have taken a peculiar example because here is a case where I am the hotel itself as a portal. Now, let's take another case where hotel does not have a portal. It is listing, say, on Airbnb or some Make My Trip or some such non-resident portal. Okay. Now, booking.com, I don't know, but whatever non-resident portal. So there the question would be, in this case, what is the quantum which is payable? Now here, if I am doing a check, if I am paying at the time of checkout, I have not paid anything at this moment. So therefore, when I look at the consideration, will include consideration for provision of services, irrespective whether services is provided or facilitated by e-commerce operator. Yes, agree. But then the question is, what is the consideration whether hotel has to pay equalization levy, whether that aggregator Airbnb has to pay equalization levy. Hotel may not be an e-commerce operator because he is now only listing. Therefore, hotel need not pay. One. Number two, what is the fee which this e-commerce operator is getting? Again, the same question which we addressed in the marketplace model. It is only the commission which he is getting because consideration is same. If the view is that no consideration should be diluted, then in this case also the amount is made at the time of hotel. But here, whether it is a consideration for provision of service is a questionable point. Let's take a third example where I am, let's take a case of Naukri.com or something like a Quicker, etc., or a nobroker.com or what I say, that other portals, housing.com or something which charges based on listing. It does not give any transaction based charge. So in this case where NR, which is a hotel, have made a listing charges, listing fee to this particular e-commerce operator, in that case the question is, how will you charge it? Because it is nothing to do with service. Whatever service you are providing, to that the question would be that this is an NR to NR transaction. An NR to NR transaction can only be taxed in a specified circumstances. What are the specified circumstances? Sale of advertisement which targets a person who is resident in India. Okay, now here is a case where is this a sale of advertisement? Answer is no. I have only given a particular listing space. Even if I say that it was a particular space, it is not an advertisement, but whatever it means, even if it is sale of advertisement, to this limit, as we concluded in the starting portion, it is not impacted by it. So it would only be the listing fees which would be subject matter of EL, and it cannot be an aggregate amount of consideration. So that's how the thoughts on this provisions are concerned. Very, very open, very, very opaque. There can be numerous examples which can be worked upon. In the given time, this is what I could think on equalization levy. We open the floor for questions for a minute. Any questions here? Proceed further. Liable to tax. Now, what was told was that there is some amendment which took place in section 6 dealing with the rule of residency, which largely said that if you are a citizen of India and you are not liable to tax in any country, entire income would be chargeable to tax in India. And then they gave certain 15 lakh certain threshold exemption, fine. 1023 FE certain funds, etc. And various treaty uses this term. So after years, 50, 60 years, we realized that this term liable to tax has not been defined. So we define this term. The term liable to tax in relation to a person means that there is a liability of tax on that person under any law of any country, and will include a case where subsequent to imposition of such tax an exemption has been provided. Now, therefore, what law says is that we are not equivalent, we are not relating it to subject to tax. There can be a situation where, take a case of charitable trust, take a case of certain pension funds, etc. Even in India, that income is exempt, so it is otherwise chargeable, but Section 10 exempted. So if that is exemption, we will still regard it as to be liable to tax. Now, what was the thought process? Now, it was similar thought process where now they say is in Cyril Parella, which says was that identical, that a person is considered to be liable to tax under that any law and will not include where subsequent to imposition of such tax an exemption has been provided. So what is envisaged in this definition is there is some legislature to begin with which imposes tax on the subject, but that taxation is relieved by certain exemption which is given under 229A. Now, what Cyril Parella says is, in context of individual India-UAE treaty, that if there is no law which imposes tax on a particular person, that is not what the term liable to tax means. Azadi Bachao Andolan said that we do not agree with this reasoning of Cyril Parella. Therefore, according to Azadi Bachao, as long as a person has a sovereign right, as long as a country has a sovereign right to tax a particular person, in that case, a person would be regarded as liable to tax. Now, we go to the treaty analysis first. We propose to first cover treaty analysis. To domestic tax, perhaps answer is like this, that this term liable to tax has not been defined under the provisions of domestic law. The question there was in the last budget, can you import a meaning of a term which is given in the treaty to interpret a domestic law decision? There are some Australian court rulings which permits this particular approach, and there in FY 2021, this approach appeared to be permissible. But because this term under Section 6 is a place where ideally treaty will not be applicable, to take leverage from 222A does not appear to be possible. So as far as reading of Section 6 is concerned, the term liable to tax for taxing a person who is citizen but not liable to tax in India may be impacted by 229A. So if there are certain islands, there are certain countries which does not have any legislature which taxes a particular person, to him there would be a problem. Second is that let's look at the treaty situation, and then we see what will be the implications of treaty. Now the threat here is that there is explanation 4 to Section 90 which has been introduced, which provides if any term is not defined in the DTAA but defined in the Act, it shall have same meaning assigned under the Act. The threat is that to what extent this term is likely to create problem. If you see majority of cases, unlikely, because most of the countries will have a legislature to tax a particular person. But this problem will only come in borderline cases where a country does not have a legislature to tax a particular person. To him, the question would be to what extent explanation 4 to 90 will apply. Can I say that the treaty itself says that while a term 3.2 permits reference to domestic law for undefined term, only when context otherwise requires. Now, can I say that context otherwise requires in this particular case? What was the context? The context was a treaty provision. The context was a Supreme Court decision. The context was interpretation which was given to a word. Treaties being existence in law. Now you bring an amendment in 2021 to change that particular meaning. So a meaning which was there in the mind of framers was something else, which was there, which is now coming into 29A. So only in those borderline cases, this kind of question will come up. But still, let us look at the implication of this term on an overall treaty situation. Now, friends, let's see what Article 4 of Tax Treaty looks like, because it is extremely necessary, because there are certain thoughts where which one believes that whether this definition curtails or give advantages to person, which otherwise was not given by treaty. Now, 4.1 says that for the purpose of this convention, the term resident of a contracting state means any person who, under the laws of that state, is liable to tax therein by reason of domicile, residence, place of incorporation, management, or any other criteria of similar nature, and also includes state, political subdivision, and local authority. The third limb says that the term, however, does not include any person who is liable to tax in that state in respect of only of income from the sources in that state. Various things. First, assessee is to be liable to tax under the laws of that state. Second, he has to be liable by the reason of certain connecting factors. These connecting factors are domicile, residence, place of incorporation, management, any other criteria. Third, they deem political subdivision or local authority to be resident irrespective. So therefore he is liable, therefore he is not liable. Whether if you are a government of a particular country, they are deemed to be resident. Let's take a state of case of India. A person does not include government. 231 definition does not include government of India. So it's not as if there is a government of India who is filing its return, but government is deemed to be a person. So therefore those things are unlikely to be impacted. Let's look only what is then impacted by the treaty, to what extent treaty changes. The first condition, who is liable to tax by reason of connecting factor. Now to this extent, only 2929A says that liable to tax would mean a case where person is liable to tax by means there is a tax, there is a liability of tax. Now there is a liability of tax is different from a person being subject to tax. There is a liability to tax on that person under any law. So the law imposes a liability and will include cases where subsequent to such imposition of tax an exemption has been provided. Plus, what they say is an exemption has been provided. Liable to tax may also include loss cases, certain set of cases, so on and so forth, or certain cases where there are got certain tax credits, so on and so forth. Therefore, they say that only to this extent, liable means a person, a country imposes taxes. If it imposes taxes, then you still have to satisfy further conditions. So it's not an end of the matter where I say that, oh, there is a country which imposes taxes. I am a country resident for the purpose of Article 4. No, you still have to fulfill further requirement of whether you are liable by reason of connecting factors. OECD commentary says that these connecting factors are equivalent to a residence-based taxation. There is again a disenabler. This term, however, will not include a person who is liable in respect of income only sourced from that state. Because what happens is that if we don't read the law this way, 229 will give an impression that if a person is liable to tax in that country by the reason of law and will include exemption, he becomes resident. So if I'm making a royalty payment to a particular person of that particular country, then merely because that law imposes the liability to pay tax on royalty or interest, you satisfy 229A. No, you may still satisfy 229A, but you may still not elevate yourself to a treaty resident because you will not satisfy the other requirement that whether it is because of the connecting factor or because of the third sentence or the second sentence of the treaty that only it is taxed in respect of sources in that state. To that extent, you will go out of that particular provisions. One. Second, liable to tax. This defines terms any law. Liable to tax under any law. You see, means there is a liability to tax on that person under laws of any country. Your doubts are expressed whether it is only income tax law, some laws of federal tax, some laws which are different than income tax, whether you can cover that or law or not. Some decisions which have been quoted in case of whatever Sharon whatever, where certain German tax or trade tax which was not forming, which is not otherwise income tax, where a court gave a ruling that it is liable to tax. To which my submission is that the word tax, when it comes to treaty, I need to satisfy Article 4, liable to tax by reason of so and so thing. Then tax would have the meaning which is defined under Article 2. Only those tax which are listed in the treaty, I need to see whether I fulfill liable to tax requirement for those clauses which are in Article 2. And it does not mean that you pay any ransom tax in that particular country. You elevate yourself to a level of liable to take by taking recourse of the Domestic Act provision. Now, second is that for the purpose of treaty, in any case, you have a case where a person is considered a treaty resident if he gives TRC certificate. One has to see to what extent one can say that no, now TRC document is invalid. The law of India, that is the country of India, will now see what is now the meaning of liable to tax. I ignore the TRC certificate. Now, this will apply in cases where the country is willing to give a TRC on the pretext that it has a sovereign right to tax. India is saying that I would like to discard this TRC because this TRC, the basis of liable to tax is something different. This would create a conflict of qualification where a term is interpreted differently by different people, if the context otherwise requires, and in my view, because of the way in which Azadi Bachao is interpreted liable to tax, context does otherwise require to interpret this term liable to tax, and therefore the entire amendment may get restricted only and only to the provisions of section 6 and 1023 FF whatever. This term appears to have been influenced by these decisions which are listed. One does not know in a treaty condition to what extent it will have its own implications. Now, when I'm looking at the residency, which is where the term liable to tax have been used, I also need to give cognizance of other treaty provisions. When I give cognizance to other treaty provisions, when it comes to individual or companies of UAE, there is specific law which is there. So there they believe that if you are physically present in UAE for more than a particular days, you are resident. So irrespective whether you are liable to tax or not, for the purpose of India-UAE treaty, they treat yourself to be resident. The question will come that when I'm testing this same purpose under section 6, when I say that if you are citizen in India but you are not liable to tax, then how will I look at the law? That's where the problem would be there. To me, I would still say that if the treaty is applicable to me, in any case, the scope is restricted to the domestic incomes which are there. Source income which are outside India then cannot be taxed by relying upon these definitions. Fiscally transparent entity. Now, this has multiple problems. That this entity is treated as pass-through in the state of resident, but it is taxed in the hands of partner. So when I'm making a payment and I'm testing the treaty eligibility, that entity is not liable to tax. Their partners are liable to tax. In fact, that entity per se, because of the constitution of that entity, the government itself treats it on a pass-through basis. To that entity, there may be certain problems. There may be a case where if, unlike you have got India, UK, or maybe India, Canada treaties, where a specific provision is created for those pass-through entities, where they say that an entity which is in the nature of trust, partnership, etc., are considered as resident if they are subject to tax in that state as income of resident, either in the hands of themselves or in the hands of partner or the beneficiaries. So if there are specific provisions in the treaty, amendment does not impact. Cases where there are no specific provision, I need to see to what extent liable to tax is going to impact me, whether the context requires otherwise, to what extent decisions of link letter will or the OECD commentaries will have a role to play. So this were my comments. This was my analysis on international taxation provisions. Friends, there are two things when we look at a legislature or a law. One is to have a very simplified tax rate. Now, what will happen is in equalization levy, maybe certain TDS on purchase, the law which are drafted in certain recent parts will make India as a country which will have a very simple tax rate, a very simple tax rate, a very simple peak tax rate, but a very complicated tax system to run on, where a person does not know, where a consultant does not know, where a legislature does not know, because words where you are using in explanatory memorandum is that our intention was not coming out clearly. For 1 year, including chambers and various other bodies made representation that please tell me what is your intention. But still, after having told what is your intention, we can't understand what is your intention. Which consultant would be able to tell? The best way to tell is that the law is fluid, pay tax. But is that the end of the matter? Especially knowing that getting refund of tax is not easy. In fact, the entire EL provisions have not brought this refund of tax very easily. If it was under Act 264, can be one recourse. CBDT Commissioner of Chairman will reject, the Commissioner of Income Tax will reject my application. I go to High Court. Method was known. Now here, if I want a refund, I will go to 264. He will say, I don't have any jurisdiction. Why have you come? Or he may just say, so the only point is that when we are looking at the way in which the laws are being drafted, one thing is what one opines to the client. Second thing is how do I comply with the law when what is the gamut or what is the boundary of the law is not known. So it can be a good thing to have a 35% tax rate, but have a regime which is so very simple that anybody can accept. Because here is a case where it is a 2% levy. But assume after 5 years, 10 years, 15 years, Supreme Court takes a view then you would be saddened 1% interest. You would be saddened with other liabilities as well, and it gives only rise to litigation. And these are the people, these are the big tech companies who view your country as an investment destination as well. Uh, that's all. Thank you very much. For me, it has been an extremely enriching experience. As I told you, these are study circles. Our thought should be freewheeling. We should not be boggled down by what is apparent in law. Let us try to test certain propositions. I may go wrong, but these are those what I said. These are those models where we can go wrong because one holds another. Each one of us learns from each other and then tries to move as to which way the law will come up. Thank you very much for a patient hearing. Any questions open for discussion?
Thank you, Bhaumik. I think Avnish has raised his hand. I believe he has a question.
Yes.
Avnish, if you can unmute yourself and proceed, and equally applies to all the other participants also.
Hi, Bhaumik, can you hear me? I'm just traveling, so I'm on a phone. Is it possible? I'm audible?
I am audible. You are audible, sir.
Okay. Bhaumik, this is a question. If you could throw some light on the amendment brought in under section 10(4)(f). I was a little late, but I don't know whether you spoke or not. Is it a good time to just to talk to you about 10(4)(f) amendment that has come in the budget on the lease rental received by a unit in IFSC?
No, sir. I would believe. Let me not answer that question. There are other facets, and frankly, IFSC as a legislature, I'm yet to have an in-depth research. I just heard it. What they are exempting unit in IFSC, payment by unit in IFSC, things are not clear. And there are certain practical aspects also which I need to see. So if you are leasing aircraft and you have a contract from IFSC, but you are leasing those aircraft which operates within all airports or unit or the place outside IFSC, I am yet to see the other part of IFSC law. Forget the income tax part, and hence I would not like be comfortable. So,
All
very
right.
honest.
Thank you so much. No issues on that. Thank you so much.
The slides will be circulated. There are a couple of e-commerce points which are noted, and do I have 2 minutes, which are just in my noting sheet?
Sure.
I'm not able to bring it to it. Now we spoke on e-commerce levy. Friends, just this came from the noting sheet, but it is important to discuss two more examples here. Let's take this same example on the screen, where I am an e-commerce operator. I am ordering something online. Now, what would be the implication where I am ordering something online? E-commerce operator is also resident. Okay, I am also resident, but the payment gateway is non-resident. Say Google Pay or some other such gateway. Assume they are non-resident. Now, to which the question would be that now that Google Pay, what is the Google Pay doing? Google Pay will receive 100 rupees and pay to e-commerce operator. Now to him, whatever be the consideration, if it is rupees 2, that view holds good, I am home. But if it is 100 rupees goes to this Google Pay. Google Pay has to pay equalization levy because scope of ESS is wide enough to even include a receipt of payment or payment of consideration. And when the payment is then made to this particular e-commerce operator, the question would be now e-commerce operator will have to then comply with his own set of laws. So when Google Pay makes payment to e-commerce operator, no levy, but that is one example. Now let's take a case where Google Pay is again a case of a non-resident and e-commerce operator is also non-resident. To which the question is that assume 100 rupees is the right view of the matter. When I make payment to Google Pay, whether Google Pay will have to pay tax on 100. When Google Pay makes payment to e-commerce operator, whether again there would be a tax of rupees 100, whether a same transaction can have a duplicated levy or not. This issue continues to be open and seems unaddressed. They should have made it clear that it is a transaction, that is on a particular transaction, if one of the parties have paid tax, then in that case, other party will not pay tax on this particular amount. So those was 2 points which still require consideration. That's all, and that's